Hello and welcome to the Delaware Mortgage Weekly Rate Update. I'm John Thomas with Primary Residential Mortgage, here to give you your update for the week of December 19th, 2011. Let's see what we have. Last week's initial jobless claim rating of 366,000 was the lowest level since May of 2008. And then we also had a double dose of good news. The manufacturing sector actually came at well above expectations. So all this was good economic news, which normally would have been bad news for mortgage rates. Rates should have gotten higher, but they actually did not. They've been staying right at historic lows. And the reason for that is the continued uncertainty in Europe, which has helped boost the bonds and keep them at a high rate, which has kept the home loan rates extremely low. Let me see now what else we got here. And also, even though the Feds are saying inflation is staying low, there has been creeping higher of consumer price index and of the producer price index. And those are both two measures of inflation, one on the wholesale side and one to consumers. So just a slight tick up, but it's been that way the last report as well. So if that continues, that would be bad for mortgage rates. You would see them to start to creep up as well as the inflation creeps up. So the bottom line is, until the uncertainty in Europe is figured out, that's going to kind of keep mortgage rates low for the foreseeable month or two at least. So January is going to stay low for seeing some huge turnaround in the economy, which we don't see. So if you want to check the chart, here on the chart, you can see mortgage rates. We're bouncing around here, and now we're on a trend where they've been. So this is the bond. Higher the bond goes, the lower the rate. So this is capping. It's called a resistance. It's kind of capping the mortgage bond. So that's why home loan rates have not gone lower than that 1 point. So they're going to stay there. That's pretty much a good cap. This week's news could move rates in the short term. Maybe a little bit worse. Maybe a little bit better. Not really sure. Other big news is National Association of Realtors is actually doing a downward revision for existing home sales over the past 5 years. They said the revision expected to be meaningful, which basically means they screwed up. They calculated wrong. Their numbers were fudged. Gotta love that, right? So it's coming out for the worse. The Treasury is also doing an auction this week of Treasuries. So that could, if it's not a good sale, that could hurt bonds in the short term as well. So what I'm going to do is recommend floating if you are closing in the next 30 days. If you're closing in the next 7 to 10, go ahead and lock it in at these historically low interest rates. Other news is we've got another first-time homebuyer seminar on tap for January 14th. That's a Saturday in Newark at the Christiana Hilton Hotel. 2 sessions to choose from, 10 a.m. to noon or 1 to 3. You can register online at DelawareHomebuyerSeminars.com. That's www.DelawareHomebuyerSeminar.com. So go ahead there and register for the next seminar. If you need help refinancing a mortgage that you currently have, rates are historic low, or if you need help getting qualified to buy a home, give me a call, 302-703-0727, 302-703-0727, or find me on the web, DelawareMortgageLoans.net. Until next week, have a great week.